Hi, good morning, all, and thanks so much for tuning into the trade setup again. Today, it's the penultimate day of the year of the decade, and it's pretty interesting. Tomorrow will be what the weekly expiry, the monthly expiry, as somebody said. It's a WhatsApp forward: monthly expiry, weekly expiry, yearly expiry, decadal expiry. So yeah, we had the fag end, but it's interesting as to what's happening in the markets even at this time. So. Let's quickly get to it, right? The US markets were a bit soft in yesterday's session. I think Mitch McConnell uh, kind of ejected the $2,000 that stimulus paycheck, as a result of which the US markets came off a bit. I was looking at the futures or reading about them, and I think that the futures also are flattish to maybe marginally in the green, if you will. So nothing dramatic happening in the mother market in the session today, and maybe the indices might remain quiet. Now, there are some very interesting things that are happening. One, I remember for the last 2-3 months, I have a number of times spoken about how value stocks are outperforming growth stocks. Well, there's a bit of a change in the month of December, wherein growth started outperforming value in the US side, at least. So, well, that's a bit of a return to what has been the normal of sorts in the recent past. So, value played its part. Now growth has come back. Let's wait and watch if this continues. So, because the bets are for the next 5 years, Morgan Stanley and a lot of other people have said that it will be returned to the value. Prepare for the value rotation was the name of the report that they came out with. The other interesting thing that is happening within the global markets is that the bearish bets on the dollar are increasing. There is one more chart, by the way, which shows the bearish bets on the dollar are increasing. Two, the small cap index in the US is by a number of standards appearing to be overvalued. So this is the chart which says how the Russell 2000, which is the small cap index, relative to the 200 moving average, has gained quite a bit and might come off a bit. Now, tie this all in with what Gautam Shah was telling us about how he expects maybe a 5 to 10% correction in January. I'm not saying it'll come in. All I'm trying to tell is that could there be a case for the broader market correction to happen across the world in the month of January? Let's wait and watch. I'm not predicting anything, but do keep in mind we are very close to very high levels. So if we correct, it might actually be considered healthy as well. You never know. For now, though, the momentum looks okay. Just very quickly, actually, before we get to our markets, Asia, flattish to marginally lower, actually. ASX, KOSPI, etc. Were looking slightly wobbly. I stand corrected, actually, as we speak. HSI and KOSPI are doing rather well for themselves, so there's been a bit of a surge. The last I checked about 20 minutes ago, ASX, etc. are all looking slightly weak, but for now, it seems okay. SGX Nifty was anyways looking strong, even when the other markets were slightly off. I think the SGX Nifty too might have gained some steam. Let's pull up the SGX Nifty chart. About 0.5% higher. We are knocking on the doors of 14,000. We might well have 14,000 in this very eventful 2020 year. So whether it happens today, tomorrow, time will tell. But certainly looks strong. Now, why is it looking strong? Because banks are looking good. I mean, the bank Nifty, yesterday I was talking about how it needs to go past the 31,000, and it tackled it with ease, dramatic ease. So 31,000 just kind of flew by for the bank Nifty, and we went over there. And it is about 1,200 points now away from the previous record high. So if traders believe that bank Nifty could actually tackle its previous record highs, then we will conquer Mount 14,000 and probably go beyond. So keep that in mind. I think the market breadth looked a bit wobbly yesterday, but I don't think there are any fissures in sight currently. We probably have a day off wherein broader market stocks came off a bit, but they may look okay. And frankly, if autos participate, then you might have the sentiment doing well. Somehow the auto index has that impact. So autos ahead of the numbers coming out on the 1st of Jan would be in focus, because almost everybody is saying that the wholesale numbers, because of the lower inventory numbers in the system, will look good. So remember last month, Maruti was trying to say that wholesales were weak, but retails were strong, and wholesales might come back. And we already know that the inventory levels across most segments were lower. So it is a safe assumption that the auto wholesale numbers will look good. Now, whether they beat estimates or not is a question, but they'll certainly look good. So keep that at the back of your mind. So in light of all of this, what are the stocks to watch out for? I would watch out for autos, Maruti, some of the tractor players, etc. All of that will look very strong. So you have to keep an eye out for that, and keep an eye out for metals. They came off a bit yesterday, but there could be interest out there, but NIT for sure. But specific newsmakers in the session today. So JSL and JSL Hisar certainly are the two stocks in focus. Jindal Stainless has approved the merger of Jindal Stainless Hisar with itself. So 195 shares of Jindal Stainless issued for 100 shares of Jindal Stainless Hisar. Now, two quick things out here. One, that purely from a near-term trade perspective, the ratio is slightly in favor of Jindal Stainless Hisar. The price of the stock is about 148, and Jindal Stainless, so JSL, is about 80, 81. The price, the ratio is in favor of Jindal Stainless Hisar shareholders. So you might have a case wherein either Jindal Stainless Hisar moves up or JSL comes off a little bit, or both could have a bit of a move like this, wherein both part correct on the upside and downside to negate this arbitrage. The question is, I think I read a couple of reports, including the one from ICICI Direct, which said that the merged entity would be it's a compelling entity to invest in any which way. So for long-term investors, maybe it might not be a bad idea to stay invested. But if you are playing for the pop, or if you yesterday played for the pop because we had told you, anyways, most people knew that there is this board meeting happening, then for the pop perspective, Jindal Stainless Hisar will gain. This is the one which will gain. Keep that at the back of your mind. Okay, let's move on. UPL, it's been a stock in news, of course, for a lot of reasons, including some wrong ones, but they've completed prepayment of $410 million of 3.25 senior notes due in October 2021. The prepayment was done because of the cash on the balance sheet, and it is in line with its commitment to reduce debt. I think the market will like it. A reduction of debt is something that market generally likes, so do watch out for this one. I would watch out for Snowman Logistics. Now, I'm not, from what I hear, the selling of Adani Logistics in Snowman Logistics is seemingly over, and which is why the stock had gained quite dramatically yesterday. There might be some residual stake left, but I think the selling is over, and that should be a big overhang on from the stock price of Snowman Logistics, because if you know that the large seller is continuously selling, you don't want to go out and buy. Yesterday, I think the final round of selling got done, most probably, and which is why the buying happened. So big spurt yesterday. I would keep an eye out for Snowman Logistics. If it gains, you know why it is gaining. That Adani Logistics selling is getting over or has gotten over, and which is why the stock would be doing well. So keep that at the back of your mind. I would watch out for two stocks in focus today: ERD Parry and Coromandel International. There's a term sheet of Kotak, which I don't have access to as yet, but heard from market sources that ERD Parry is going to sell some stake, 2% stake in Coromandel. So Coromandel, the discount is 3 to 6%. You might have a case when in Coromandel International declines, but for ERD Parry, this is a positive. It's a strong stock. Most people know about how good a stock ERD Parry is. So company-wise, but the point being, again, as is the case in UPL, ERD Parry will use this money to reduce debt, and debt coming down is a big thing. It's a strong, stable stock. Debt comes off. Do watch out for ERD Parry. This one could gain. Coromandel could come off a little bit. So that's something that you got to keep in mind. And some delivery data before we wrap up. Some of the stocks which had a really good surge and price and volume action. So leave Vakrangi out. I've just marked it because the delivery data was strong, but it's a very strange stock, so I'm not getting into it. But Schaeffler India has been looking good. A lot of brokerages have written notes on it, even though it's very expensive, but do watch out for that one. And Vinati Organics took me by surprise. Suddenly out of the blue, the stock spurted 6%, decent delivery volumes as well for the kind of price surge it had. So do watch out for a few of these names. Pretty good price and volume action there. Last but not the least, every day now for the next 3 days, I will leave you with the thought for 2021 from one of the key large global brain trusts, right? So today, I think it's JP Morgan Private Bank, which is saying that they think that the historically high valuations may be justified because while you don't get a bargain in stocks, but they will likely outperform fixed income and cash next year. That's the view that JP Morgan has. We'll try and get you as much global perspective as we can every single day on Trade Setup now for 2021. There seems to be a bit of a consensus around equities, but let me spell it out for you every single day. Thanks so much for tuning in today. We have a very interesting conversation today on Talking Point. Shankar Sharma would be joining in. Maybe you want to tune in for that as well. But for tuning into Trade Setup, thanks so much. Have a great day ahead.